this video again. This is gold versus the US dollar on the 4-hour time frame. But I want to begin on the daily time frame. I want to do a quick top-down analysis on this gold. Today is the 21st of December 2023. Now we are operating right in this chart is gold on the daily time frame, whereby our bearish version of the standard trading model is trying to print itself. Now, where we said there was a sweep of liquidity, then the first break of structure, it's high right here. That's where you take your entry and potentially target this lower low. So on this chart, we can see this is there was a sweep of liquidity here. Then the first leg right here, first break of structure at its high. That's why we said we take our entry to potentially target this lower low. That is what our model says. Yes, that is what our model says. So dropping down on the lower time frame to watch at this what was happening at this area, because we are targeting to take this lower low. As long as this high is not taken, this is the stronger high that has been formed. As long as this market is in between this zone, all this zone up here, as long as the market is in between there, and this low and this high has not been taken, this stronger high has not been taken, then we expect the market to take this lower low first, before it can take this high. Using this model, that's the conditions of this model. So the market might hang around this place, but still we must check this guy before we rally up. Dropping down on the lower time frame to see exactly what is happening here. Yep. We can see that on the 4-hour time frame. This is in the 4-hour time frame. This guy right here is the liquidity, is the second, the first break of structures high that we saw on the daily time frame. Like this one here. Let me show you. This guy here, this line here is the one that has just taken this liquidity on the 4-hour mid time frame. So this has been opened, and the way we said the market is fractal in nature. With this model, we expect a sweep of liquidity, which we have right there. Then the first leg, first break of structure. Then on its high, this is where you take your entry and potentially target this lower low. That is the long-term target on the 4-hour time frame. But I said we can always take profits, partials at the nearest liquidities lying in between here. Now we can see there was a sweep of liquidity right here. Then the first leg, the clearest first break of structure that we can see is right here. Then at its high, that's where you set our order right there, to potentially target this lower low. That is the long-term target for this model. Yes, and we can see the market just reacted on it. As long as this high has not been taken, this is where we said we set our stop loss. Our stop loss right above there, and considering the market, the brokers that you're using spread. So this high, the market reacted on it, and we are seeing we are moving downwards to take this lower low. Yeah, to take this lower low. But before we take this lower low, this has a lot of pips on gold, right? And we know anything can happen in the market, so you have to take partials on it. Yes, or with a good lot size, this is good money. There's good money right here. Now let's drop down on the lower time frame exactly to see what happened at this zone. That's just a proof of the fractal nature of markets. What happens on the higher time frame is exactly what is occurring on the lower time frames. So this dotted line here is the liquidity that we saw on the 4-hour minute time frame, the 4-hour time frame, and at the first break of structures high. See, I don't know if you remember this setup right here. I broke down this setup and said right here we had a market structure shift on the lower time frame. I think it was on the 30-minute time frame, and we saw after this sweep of the clearest first break of structure that we saw there on the lower time frame with this guy here. That's where we took our entry on the lower time frame. Remember that first break of structure we saw right here, and its high right above here. Just following the logic for this model, and to target this lower low, and we can see it was smashed right here, smashed right there. And when you go back on the higher time frame now, on the 4-hour minute time frame, you see the bigger picture of the market. That you can see this guy here was the first break of structure on the 4-hour time frame, and right here we can see this is the market structure shift, which makes this setup a high probability, a high quality one. That there is a chance of this low being swept by the market with this market structure shift. So this high, the market mitigated it, and we can see by this logic the sweep of liquidity, which is right here. Then the first leg, first break of structure, then at its high, that's where we see this right here. This is where we take our order. But you can see this break of structure, it was not that clear. Let me just reverse back. They formed equal lower lows, and I'm here to understand this. I'm here to find out what really happens usually when there is a draw of the swings. Will I call it a break of structure or somehow or not yet? Assuming it was a break of structure, this one becomes the high. That is why we take our order and potentially targeting this lower low, which has just been smashed. Ta-da! This setup just printed there. But also assuming that these lower lows has not been taken. This lower low has not been taken. Then we can call all of this guy as the first break of structure. Then this high is where we set our entry, right? Depending on this pattern, sweep of liquidity, break of structure, it's high right here. That's why you take our order right here to target this lower low right here. We can also target this lower lows from here. When this market is going up, I have to take this guy and potentially riding down to take this lower. Okay, this is the short term take profit, but long term this guy down here. What you can see here, this market just reversed after sweep of this liquidity. And I believe this is the only liquidity that was remaining all around here. This uptrend, because you can see there was it hit this FVG right here. That's a liquidity was filled right there, and you can see the clearest first break of structure. This was the lower low, first break of structure right here. Then we set our order here, but we can see the liquidity had been swept here. Sweeping the liquidity, this one becomes the stronger lower low. Becoming the stronger lower low, then this guy, this where here becomes first break of structure. Then its lower low, this way is set to your order, and potentially targeting this high which was smashed, right? And we can also find out that I hope there was a sweep of liquidity somewhere here. If you drop down on the lower time frame, yeah, which we went and swept this guy. This was also a very clear sweep of liquidity, whereby we can say this one became the stronger lower low, or it tripped somewhere. No, the stronger lower low. This market rallied up. Now the clearest guy that we can see that had not been mitigated is this guy. This guy right here. This break of structure. This market is reacting off of it, going up. So there's nothing else which is left here. Oh, this guy. This sweep of liquidity, you can see this guy. There will be a reaction off of this zone a bit before we come to take this lower low. That is the logic we are using here, right? That's the logic we are using here. Take this lower low. Yeah, that is depending on our model. That is according to our model. But you can see, anything can happen in the markets. Something can happen. We might even take these highs, and then our setup becomes disqualified. But even if that happens, we have collected good pips here, right from this setup here. We also have this one here, right to this place. That's a good amount of pips. Yeah, because when you watch this market on the higher time frame, let's see on the daily time frame, we can see with the idea of the FVGs, you can see this right here is an FVG, right? And you can see this market, I just feel that FVG, and the next target this high. That is with a different logic. Yeah, but as long as this market is in between this place, we must take this lower low first, depending on our model right here. So this high might be taken. The market might hang around inside here, but eventually take this higher, this lower low. That's why I'm saying in this lower time frames, it's good to trade with a lot of cautious. Yes, that was what I just realized. Yeah, we might take this high. So the best way to maximize the opportunities on this setup is just to catch good pips, few pips, and we are good to go. Let's drop down still on the lower time frame, this one of the 1 hour, and see what exactly this market was doing around this place, and what it is doing around here. I believe 30 minutes time frame has nothing much, so this one is a 15 minutes time frame, where we can say this is the guy we marked. We said the other sweep of this lower lows. I don't know if they were swept or they were just made equal lower lows, right? So we were arguing that where do we take our setup. But on the 15 minutes time frame, you can see after this sweep of liquidity from a higher time frame, we can see the first break of structure was right here. I will drop down on the 5 minutes time frame and you can see it very clearly. And we mitigated that guy, and boom, we took this target. Of course, stop loss above here. But for gold, this pips here is a little bit craziness. So what usually happens when this guy is taken, you wait a bit. You wait for the market structure shifts right here. You can see. You can see it's it's still the fractal nature of market. Sweep of liquidity. We swept right there. So we wait for the market structure shift, which we said we should have here, which we had there. Then first break of structure, we watch the market. The first break of structure, which is not visible here. Let's drop down on the lower time frame and see whether we could have taken that opportunity very well. This was now in the 5 minutes time frame. This was the clearest. You can see first break of structure. Not the first. You can also see something here. But on the 15 minutes time frame, this was the clearest. Yeah. But we'll expect a reaction on this guy when the market will hit that guy, beat our reaction before we rally up. Or if the market is intentionally wants to take those high, but if it wants to reverse, we'll go there and rally down. So this is the place we are interested in with this bearish version of the model. So we can see a sweep of liquidity. Then there was a first break of structure right here, right? First break of structure. Then it's high. This is where we take our entry and potentially to target this lower low, which was smashed. This was after the market structure shift that we saw on the 15-minute time frame. It was just crazy like that. Yep. We can also see this market sweep some liquidity here. After sweeping some liquidity there, the clearest first break of structure that we can see is this guy here. And this guy becomes point of interest. Yeah. There was some sweep of liquidity here. While at our first break of structure, we can see this one is the 5 minutes time frame. So it's a bit the pattern is a bit of what? Yep, but it's the fractal nature of markets. That is it. Yep, but it's good to operate on the high time frames. Yes, that is it. That is it for gold today. What is the gold is doing? So it's right here. Gold is around here, 15 minutes time frame. Let's see on the 1 hour. This is where gold is. Gold might come to take this high and rally down, or it might continue to take those highs above there. That is the logic we are using here. But depending on this on this age of our age, right? Of our age, there will be a reaction of this zone. So it's important to take some pips, right? If it's interested for going up there, then you could have taken some partials there. But if it rallies with us, then cool, we'll be fine with it. So that is for gold today. That is for gold. That's what I can say about gold. A small bit of technical analysis on gold. So in this video, are two things that have come out I think number one is that bulls and bears, we all make money after all, as long as you know exactly what to do in the markets, you know your age. So if the market is bullish, you can still make money shorting the market, and if the market is bearish, you can still make money by logging the market. Only when you know the market, what the market is doing, and you know your age, because the market does not move just in one direction, just a straight rising market. It always fluctuates, right? The high highs and high lows, lower lows and lower highs. That's the nature of markets. Yeah, so you can you can be you see, we are advisable to be trend traders. Yes, you can still make money being a counter trader. Only that should know what the market is exactly doing. Yeah, that is the most important thing. So this is gold. If you like this video, if it is informative for some, yep, you can give it a like, and you can also comment on what you wish me to discuss about next. If you're new, you can subscribe to the channel. We want our family to increase. That is what I can say about today. Yes, so have a safe time while you're trading. It is a holiday season, and take care. There might be some fluctuations in the market, but what I believe is the algorithm works, does not change. That does not change for now. But what I think, and the news will just be a form of rushing the market to our take profits or our stop losses. That is it. So thank you so much, and I enjoy. Thank you.